top down. Now understand one thing, the only way to understand the market movement is through going the old school way. Now the old school way of trading involves understanding the direction of the market and understanding what the market is actually saying. You can't trade the old school way when you can't understand where market is actually heading. You must be understanding what the market is saying through what we call the patterns and what we do call the waves market is actually printing. Now this market is actually right now telling us that it is going to the downside. And why is it actually saying that? It's because we have an impulse right here, and this move right here, however much, is going to the upside, but it is a little bit kind of sideways, and it is showing us it has got a triangle in the middle whereby it has got an A, B, C, D, E. So that structure alone shows us that it is just a correction that is correcting this first move, so it needs to come to the downside. But now trading involves entry. Entry is the precision that it determines where you're going to make money or you're not going to make money. So if you're to enter, you need to lower the time frame a little bit. Now we are starting from the weekly. I want to go to the 1 hour, to the 4 hour. Sorry, I want to go to the 4 hour, the 1 hour, and then the 15. So but the reason to go there is to get a better entry. But before we go there, let's understand what structure are we actually forming. So near me, I have already got what we do call a tool that can actually help me to explain what is actually happening. This can be labeled as 1 2 3 4 5 or WXYZ because it's an ending diagonal. So a W, X, Y, and X and then Z structure is what we are looking at, which is an ending diagonal that is actually happening right here. So but within the diagonal, there are structures that are actually playing out. Those are the ones that we are now playing with internally, whereby we are currently looking for another move to the downside right here. But where do we enter from? Go to the 4 hour time frame. Do not waste any time. Actually, let me start with the daily. Reaching the daily, you can already start to see something that is actually popping up. You can understand simply by looking at this that this thing, old school way, is actually printing what we do call the heads and shoulder patterns, and their reversals, meaning they are going to continue to downside. So that's another confirmation. After understanding that their heads and shoulder patterns, lower the time frame, take it to the 4 hour a little bit, zoom in. What do you realize at the 4 hour? One, I said this market has got a tendency of covering its gaps. You see this gap that happened right here. Price came back down and covered that gap before continuing to the upside. And now if I do have another gap right here, because I'm seeing a gap right here, if I do have another gap right here, I think price is likely to do the same kind of tendency, come cover it and continue. So I think there is also a confluence right there. Another thing that I see a flow, what we do normally call frequency, a frequently market touching this support and bounce that resistance and bouncing off. So there is also another confirmation for a move down. Others will say it is covering FVG, but all that is jokes. So take me to the 1 hour. So 1 hour, reaching 1 hour, I'm also seeing another flow. Support and resistance wise, I can see a flow that is actually happening from, let me first zoom out a little bit so that we can understand. Support and resistance wise, I can also see a flow that is actually happening right here. Because old school way, we normally say that if we have got 1, 2 touches, the third touch normally is the one that indicates the direction. So that if it touches and rejects, we are dumping super deep on usdjpy. So now if I have got this flow whereby I'm going to be establishing my entry at the 15 minutes, so at the 1 hour, I'll lower a little bit to the 15. Take me to the 15. This is how this flow is actually looking at the 15. I wanna actually redraw it again at the 15 so that I get a perfect calibration of this line right there. So the line is being drawn so nicely right there. So what do I need now? What I want is to see that this move can at least move back to this line. Failure will just cause me to short this market. And why will I short this market confidently? To confirm that this market will have to continue to the downside, there must be proof of what we do call a corrective move. Now, what is that corrective move correcting? We have already got a move that goes to the downside. Now, there must be something that should confirm to me that this move right here is just a correction. And a correction must travel in what we do call through waves. Through waves are like 1, 2, and 3, which is an expanding flat, and that wave will have indicated that we are continuing to the downside by a failure from this kind of move. You get? So take me to the 5 minutes. I'm now at the 5 minutes. Let me first remove these many lines. Are we having any characteristic of this move being a possible failure? So this move being a possible correction. A number of them are already appearing. A number of them are already appearing. Now, number one is to look at this move right here. Get me the wave tool, I think. It will help me to actually do these things nicely in the way we can all understand. Patterns, it should be located in patterns, and it should be the WXY tool that I'll use. I'll just use a WXY. So this is a W. This is 1, 2, 3 waves to the downside, up, and 1, 2, 3, which is a X. Now I want a Y right there. So if we happen to see price action coming back to this zone, we are shorting. We are shorting USD JPY. So top down is done in such a way. I don't want this thing to continue more to the downside. I want it to first come back right here, and from there I'll short it. That's the top down analysis that you need.